Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. A volatile week in the markets comes to an end after a 5-month rally. Tech shares sputtering. The tech-heavy NASDAQ seeing its worst week since March. Microsoft down on the week as the TikTok deal nears a looming deadline. Bloomberg has learned that TikTok intends to bring a proposal to the White House by September 20th, the official deadline date. Joining us now to break down the week that was, our Abigail Doolittle. Abigail, feel like a broken record. Volatility, volatility, volatility. Walk us through the week that was, and how might next week be different?
Well, you know, this week, to your word and point, very, very volatile and very choppy, up and down, a real roller coaster. But at the end of the week, it was another down week. And today, it was especially choppy. Earlier in the morning, it didn't feel as though it would be that way. It felt as though the bulls were trying to take it away, and then the bears stepped in. At the end of the day, a bit of a mixed market. The S&P 500 up slightly, the NASDAQ 100 down. And, you know, Emily, I think all of this continues to be, you know, part of Newton's third law. What goes up must come down, or at least what goes up too much. Because if you remember August, that was a huge month for big tech. The New York FANG index up more than 20%, its best month ever. So now we're seeing, you know, a bit of a reversal around that. Interestingly, on the day, and this is true on the week too, even though we had the NASDAQ 100 down, we also had the NASDAQ 100 VIX, or the VXN, down. So that is a sign, to your question around next week, maybe next week some of this choppiness will leave. And you see Apple there down once again on the day, down 1.3%. And pointing to the idea that next week, maybe, again, in the near term, some of the choppiness will leave. If we go into the Bloomberg terminal, we have a great chart. Now, over the long term, this probably suggests there's going to be a huge bout of volatility ahead. But relative to next week or two, and maybe, you know, this is trying to get too cute, but what we're looking at here in white, that VXN, or the NASDAQ 100 VIX. In blue, we're looking at the NASDAQ 100. You can see back in February when they diverged, the NASDAQ 100 VIX in white shot higher as stocks dropped. Well, now we have that NASDAQ 100 sharply higher and a big divergence with the VIX, the VXN, suggesting that will come together with stocks dropping and that VXN shooting higher. But there's reason there to think that that's going to perhaps taper off for next week, maybe the 2 weeks. At the end of the day, those two will reconnect. So again, a big bout of volatility probably ahead at some point before the end of the year. But hopefully, for the stock bulls at least, next week will be a little bit smoother.
Give us an indication of what's happening beneath the surface. If you look at some of the individual movers, some of these moves were pretty ugly.
Yeah, they were really ugly. You know, I should add another piece of the volatility, a lot of focus going to the options action, but another piece of it, a move toward the cyclical. So there's one sector higher on the week. That was materials, up 1%, followed by the industrials. So as you have investors moving toward those cyclicals, these tech stocks that we're looking at now on the week, as you said, very, very rough. The worst week for Apple since March, down 7.4%. The worst week for Tesla, down 11% since March. Amazon, Lululemon down. Lulu, of course, not a tech stock, but in the NASDAQ 100. I believe that was actually the worst percentage performer. Their outlook a little bit disappointing. But overall, you have these stocks. If we were to look at these stocks on the year, huge gains still, up, you know, more than 50% really for all of these stocks. I believe that's the case. Real strength. So investors taking some chips off the table, perhaps putting them into those cyclical names. And on a bright spot, this is not a cyclical stock. It is the ultimate stay-at-home stock. Zoom outperforming once again. Zoom was the top stock last week. It's the top stock this week. It's actually up 4 weeks in a row. So here is one stay-at-home stock that's just performing in an unbelievable way. Take a look at that, Emily. Up 66% over the last month. And they did, of course, report that great quarter and boosted the outlook. So investors want in on Zoom.
Wow, and they see more growth ahead. Definitely one we're going to continue to follow. Bloomberg's Abigail Doolittle. Thank you so much, Abigail. Have a wonderful weekend. Sticking with this week's tech movers, I want to bring in Mark Mahany of RBC Capital Markets, who, of course, covers so many different companies across the big tech landscape. Mark, always great to have you here on the show. Obviously, you're looking at Facebook, you're looking at Google, you are looking at Netflix, Amazon. What's your take on the sell-off that we've seen over the last few days after such an incredible an unprecedented, really, rise.
Emily, I think you set it up right. I think Abigail did too. We had a meteoric August, and we've had what I would refer to as a pretty healthy correction. These stocks have all done well. Amazon and Netflix in particular have done phenomenally well this year. Facebook's done reasonably well, outperforming the market, and Google's kind of been in line. I think that's largely tracked with what's happened to fundamentals this year. So the year-to-date rally, I'd largely agree with, but we did have a surge in August, and this kind of pullback, 5 to 10%. That's probably healthy for these names, and you want to. There were medium buys for us going into this correction. They're still not cheap, but anyway, a little bit more attractive. We consider them to be grinding stocks through the back half of the year.
We've been covering TikTok just about every day here, which has proved a fairly credible threat to Facebook in social media. Instagram has come out with its take on TikTok with Reels. I know you also follow Snap. What's your take on just how much of a threat TikTok is to these U.S. social media giants, even in the midst of this uncertainty around the China situation?
Well, I think TikTok is a phenomenal example of product innovation. They got mobile-first, user-generated content, algorithmically driven video. They nailed it. It's a beautiful service. It's highly addictive. So hats off to them. And it's actually a little surprising. They did that. We've had other companies kind of experiment around this with Twitter, and Facebook's done a little bit of this in the past. YouTube, it's sort of odd that this company kind of did it. It's not odd, but it's interesting that they did it, and YouTube was kind of left in the side, and Facebook's now playing catch up. That all said, I don't know what happens to TikTok. Nobody can really know with certainty what's going to happen. It's had dramatically positive momentum, but that looks like there's a distinct possibility that gets derailed if the asset gets sold, if it gets cut up, if the algorithm gets removed. I think there's a real opportunity here for Facebook with Reels. And there's a real opportunity because innovation could well get stymied at TikTok. You take a great asset like that and you stymie innovation for 6 months, somebody else is going to come in and take that market or take some of that market share. And I think that's Facebook's opportunity. We think the Reels product is good. Is it better than TikTok? No. Is it comparable to TikTok? Yes. If you were going to start both at the same time, you could pick one or the other. So I think Facebook has actually got a real nice opportunity here, given all the dislocation that TikTok's likely going to face.
Interesting. Well, it's certainly likely that nothing happens to TikTok at all, that there's potentially a changeover in the administration, and this was all just a lot of noise. We honestly don't know. We'll be seeing what happens as we approach that September 20th deadline. Talking more about Facebook, though, we've talked in the past about how the Blue app, Facebook proper, the original social network, is just not as sort of cool as it once was. Instagram has really carried on the torch in a way. What do you think the future of the Blue app itself is as it faces these competitive threats from all sides?
I'm going to give you a different perspective on this, Emily. I think Facebook, there's been two major trends across the internet this year. This dramatic acceleration in online retail. We all needed to shop. There was no other place but to buy online. That trend is phenomenal. Amazon benefited from that. Shopify did too. The other trend is that social media usage really blew up this year, i.e. it accelerated and increased materially because in these times of pandemics, social unrest, et cetera, people were reaching out for friends and for family, and Facebook's kind of the way to do that. That's why they had an acceleration in growth. So Facebook has actually been a bit of a usage beneficiary of the COVID crisis. And what it's created is this new opportunity for Facebook, which is social commerce. If social commerce really plays out, I think the best derivative off that's going to be Facebook with Instagram. And there's something else. We put out a report on this last week. Facebook Marketplace. Don't tell anybody this, but Facebook Marketplace is now 2 times bigger than eBay, 12 times bigger than Craigslist. It's even bigger than Taobao in China, just in terms of raw users, very early on in terms of monetization. But this, to me, is just like another billion user asset that Facebook has that's highly under monetized. That's one of the reasons that Facebook's one of our top picks going forwards, even with the run it's had year to date. We like the shares.
I definitely have to agree. If you have some cleaning out to do, Facebook Marketplace is the
Yes.
way to do it. I want to ask you about Netflix, Mark. I spoke with Reed Hastings, the co-CEO of Netflix, Earlier this week, I asked him what Netflix's next act will be, and he basically said more of the same. We're going to double down on unscripted content. We're going to double down on original content. Can Netflix keep growing as it has, with this singular strategy in mind?
I think so. And in part because they've tapped into the streaming growth, dramatic growth in streaming. And what's happening isn't that people are picking Netflix versus a Disney Plus or an Apple TV Plus or other services. They're picking a bundle. They're picking 2 or 3 services. That's what our survey work suggests. And Netflix is almost certainly part of that bundle. So they win as the streaming bundle wins worldwide. The real game for Netflix now is, as Reed said, it's local content. It's original content, but it's really international original content. It's LLO, local licensed, local language originals. So it's the shows that they're directing, producing, and acting in Spain, in Argentina, in Korea, in Japan, in the Philippines. They're doing this globally, and I think they are 2 years ahead of any other global competitors in terms of the total amount of internationally produced, international content that they're rolling out. They own it themselves. That's what's going to probably cause them to sustain this growth for the next 3 to 5 years. I think that's the underappreciated element of Netflix. Reed was right when he says they're still focused on original content, but the real nuance is they're focusing on international original content when nobody else is.
All right. Mark Mahany, always good to have you on the show. RBC Capital Markets Managing Director Mark Mahany, always there with some wise words. We'll check in with you again in a couple of months. All right, coming up, we talked to an investor in education technology, looking at some of the companies making a huge impact in remote learning and where the gaps still are for our children. That is next. This is Bloomberg.
I'm always just trying to be very honest, how unbelievably angry and frustrated I am at the lack of federal leadership, the dishonesty, the playing things down, the lack of resources. I've said repeatedly, this is morphed from a natural disaster to a man-made catastrophe. We shouldn't be in this situation.
Catastrophe scenario is not that far off. Even we have 20-30% of the population that really doesn't have sufficient internet access. School districts have been doing a heroic job getting laptops out. The local telecom carriers have been doing a great job getting them that internet access. But even then, we're seeing 5-10% of the population isn't engaged for whatever reason.
It's a tough situation for sure. I think there are some things that we can do that are super tactical and super immediate. The first is we need to ensure every student has access. Right now, Common Sense Media just put out a report which estimates that 15 to 16 million students actually lack access to adequate internet and devices.
Just some of our interviews there from the week addressing the concerns associated with remote learning. Where can we do better for our children, for our educators, for our future? We are joined now by Jamira Herrera, an investor at Cowboy Ventures, a stage focused fund where she focused on ed tech companies. And Jamira, I saw you nodding there as we heard Arnie Duncan and Sal Khan calling this a catastrophe. You've worked in ed tech for a long time. You've invested in this space for a long time. What's your view on the urgency of this crisis that is facing our children?
Yeah, like Arnie and Saul said, it is not far off from a catastrophe in a lot of ways. We know that millions of students across the country during this time do not have access to high-speed internet, do not have access to devices. And a lot of these students were the same ones that already went to schools before COVID that were under-resourced, that didn't have access to the same resources as much more well-resourced schools. And so unfortunately, during this time period, what you're seeing or what we expect is that we're going to increase the divide that already existed within students even more as schools, unfortunately, and districts, unfortunately, don't have the resources they need to best prepare and support their students. And this isn't just across lines of income, but it's also across lines of race, across lines of rural versus suburban. It's also across lines of if you're a student with an IEP or a student with disabilities, you're not receiving the support that you would normally receive in a school district. And so there's a whole bunch of resources that students aren't getting now that they're at home.
So looking at some of the stats out there, you know, a huge percentage of children might have to do their work on a cell phone, might have to use public Wi-Fi, might not have any devices at all, and may not be able to do their work at all. Where are the gaps that need to be filled? And are there companies out there that are filling these gaps? And will they be filled in time to meet the need?
It's such a great question. And so I think the most pressing needs, right, are around the infrastructure. It's around the devices and the internet access. If you don't have those two things, all the rest of the other things, whether it's online curriculum, whether it's classroom management tools, all of that doesn't really matter if you don't have the primary tools. And in terms of the companies that are offering that, I think it's less so companies, and it's a lot more. I've seen a ton of work around nonprofits trying to make a difference here. There are some internet service providers that are trying to make their access more affordable. And there is some government and regulatory work that is happening to try to give folks more access, but there aren't necessarily companies that are going after the infrastructure that's needed. And that's the assessment of what I've seen. But in terms of a concentrated effort, we have yet to see it across the country. You see it more at the school district level, you see it more at the local level, and then you see some states taking a little bit more of a charge.
So where are the opportunities for investment? We know that there's been an explosion in a demand for supplemental learning tools, live online classes. How big an opportunity is that? And does that opportunity remain once things do go back to quote unquote normal, whatever that is, and people don't necessarily need to supplement their education?
Yeah, so that's a great question. As someone that's been investing in the sector for several years now at this point, the sector kind of has booms and busts. You have moments where investors are super excited to invest, and you have moments where they're like, oh, ed tech is terrible and you should not put money towards that. We are thankfully in a time where there is that boom period. And one of the areas that we are seeing a lot of excitement around is the supplemental learning, primarily for K-12 students. And I do think that, one, there are massive tailwinds in the market because there is more acceptance that a modality of learning around online live is exciting. And it's not just because it makes it more accessible, but also in the examples of like companies like OutSchool that connect, classes of 6 to 8 students, it's students meeting students that they would never otherwise meet. So there are a lot more factors, or a lot more positives that come out of that experience and engagement that comes out of that experience than purely just the learning itself. And I do think that a lot of that will continue post-COVID, because even when you think about school districts and public schools, a lot of the things that are being cut are enrichment, are supplemental learning, and the core curriculum is the thing that remains. I think the one trend that I am a little more skeptical about is we're starting to see companies that are targeting learning pods and creating and being able to facilitate learning pods. Given that most of the parents I talk about want to actually send their students back to school once COVID is over, I'm a little bit more skeptical about whether or not the learning pods remain.
Absolutely. Well, such fascinating stuff you're following. I know you're also doing a lot of work on retraining adult workers, workers who've lost their jobs. That's another opportunity. We'll have to leave it there. Jamira Herrera of Cowboy Ventures, thank you so much for sharing the work that you're doing with us today. All right, coming up, Vmware following Twitter and Facebook, allowing staff to permanently work from home. But you can expect a pay cut if you flee Silicon Valley to a less expensive city. Details on that ahead. Now to a developing story. We're following VMware employees who take up the company's offer to become permanent remote workers will get a pay cut if they leave Silicon Valley. Bloomberg Tech's Nico Grant broke this story, joins us now with more. So Nico, tell us the fine print. VMware has an interesting sort of scale by which they're determining folks' salaries depending on where they move.
Yeah, so if VMware employees want to leave Silicon Valley or the surrounding areas here in the Bay Area, then they have to accept that the company is going to cut their pay should they move to a geographic region with a lower cost of living. And so, for instance, moving from the Bay Area to Denver, Colorado would cost an employee 18% of their salary. If they wanted to go to Southern California, maybe Los Angeles or San Diego, then they would be giving up 8% of their salary. And this is at a time when workers are encouraged to find a more flexible work from home solution. They may want to escape sky-high rents and mortgages and big cities, but also in an ideal world would want to hold on to their, big city salaries.
What are other companies doing to address this, increasing demand? It sounds like Twitter is already doing this and has a sort of local compensation program that's guiding the numbers that they're giving their employees.
Absolutely. So, Twitter as well as Facebook and VMware, for that matter, all had before, this time period, a strategy of paying for talent, depending on where that is. VMware calls it, the cost of labor in certain places. But what's new here is that companies are at their discretion deciding whether to uphold those pre-existing policies from, another world in this period, which is in such flux. And so we see Dell, for example, which is headquartered down in Texas, decide not to make any adjustments to compensation at this time, they said. But Facebook says that as of 2021, that is when they will cut someone's pay if they move to a less expensive place. ServiceNow CEO Bill McDermott spoke with me recently today and said that they will likely take a similar approach. They haven't made a final decision, but it's very likely that in 2021, that high pay that they were given for the Bay Area will be reduced if they go elsewhere.
So quickly, we have about 30 seconds. Are employees going to take the opportunity, but take the cut?
Yeah, so I think that, some who want to be closer to family and loved ones and can succeed in the real estate market, which is really what this is about, will absolutely take the cut and think that it's worth it. But others might not.
All right. Well, really interesting story. I know you're going to continue to follow it. Thanks so much for bringing us that scoop. All right. Coming up, if you've left your heart in San Francisco, you might want to leave your lungs somewhere else. The Bay Area is suffering from some of the worst air quality in the world as wildfires rage across Northern California. One argument to go to Denver or San Diego or somewhere else that is not here. We will bring you the very latest next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. The air quality in Northern California, Oregon, and Washington is now among the worst in the world, thanks to multiple fires that have swept across the region. Joining us now for more on what's happening at this moment, Bloomberg's Sophie Alexander, who's been covering the story for us. Sophie, I just looked at my neighborhood this morning. It was around 320 AQI. It's dropped to a balmy 275. Still horrible. What exactly is the cause of the air in particular being so bad the last 3 days? The orange haze, the ash, rainfall.
Yeah, so just, across the West Coast right now, there have been so many fires going on up and down California, and it all really depends on where the wind's blowing at any one time. And right now, it seems like the wind is pushing a lot of that air, a lot of the smoke towards the Bay Area, which is, why we're experiencing this terrible air quality.
This has been debilitating for a lot of people. I know it's been kind of a rough week. It's been hard to get anything done and to focus. How much longer is this going to go on for?
Yeah, I mean, it's hard to say whether this is going to last through the weekend or when it's going to clear up. One of the people I was talking to who runs a restaurant today, she had to close it yesterday, and she was lamenting about the fact that, you can't really look at what the air quality is going to be at noon today. You can't look at what it's going to be like tomorrow like you can with the weather. But as for California's fire season, that's really just getting started. So we should expect similar conditions, for maybe another couple months.
It's just a double whammy for businesses that have already had to shut down because of COVID. They've adjusted, and now you can't even be outdoors. How is this impacting the businesses that you've been talking to, COVID testing sites, for example, that are also outdoors?
Right. Yeah, it's affecting us in a bunch of different ways. Just regular small businesses like restaurants that can only really operate outdoors for sit-down service right now. Obviously, no one wants to sit down outside when the air quality is so bad or when the sky is orange and have a meal in apocalyptic conditions. But then it's also hard for our response to COVID-19 across the state because we rely on outdoor testing facilities because that's what's safe to do. And it's no longer safe if the air quality is so bad. So it is really a catch-22.
All right. Well, we're going to continue to monitor the situation throughout the weekend. Hope it gets a little better by Monday. Bloomberg Sophie Alexander, thank you so much for that update. Well, sports this year has faced unprecedented challenges, from the pandemic health crisis to players boycotting games as they protest police brutality to shortened seasons or no seasons at all. But last night, football returned in Kansas City. DraftKings CEO and co-founder Jason Robbins spoke to Bloomberg's Mahany Quinn about what the return means for the future of sports betting.
We're a mobile app, so whether you're sitting in the stands or whether you're sitting at home watching it on TV or wherever you are, you can always access our app. So I don't really think it matters too much. I think it's just the important thing is that sports are played and everybody does it in a safe way and the games can continue.
Jason, what was it like in the early months of the pandemic, obviously when people could not bet on sports? Anecdotally, I posted a picture of my teenage sons playing ping pong, and one of my friends said, "What's the spread? Can I bet on it?" There was obviously appetite, but they couldn't do it.
Well, it's funny you mentioned ping pong. Table tennis was actually at one point our #1 betting sport. So it was one of the few things going on. I guess it's a sport that lends itself a little better to social distancing since you're on opposite sides of the table. But at one point, that was our biggest. Esports has been huge for us. That has grown tremendously. Obviously, people can play esports without having, to be near each other, so that helps. And there were other things as we kind of got creative. Things we did for politics, TV shows. Not anything where you could wager money, but free to enter pools and things like that. So we did a lot of things, and I think the biggest beneficiary overall was esports, because even after we started to see traditional sports like the PGA Tour and now basketball, MLB, NHL, football come back, esports has continued to maintain a lot of the growth it saw. And esports was tiny going into this whole thing, and now it's a pretty substantial product for us.
What are your expectations for volume, though, with no Big Ten or Pac-12 games happening, Jason? How do you get around that?
Well, we were very, cautious with our forecasting. So, when we issued guidance at our last quarterly earnings call, we did not actually include college sports of any kind in our forecast. So, we feel like, if there are games that, look like they're hopefully going to be played and they can be done safely, that's some upside for us. But we're not counting on it. And, I think for everybody, really, the more important thing is just to see sports, whether it's the NFL, college football, anything else, to see them successfully manage through this gives everyone, I believe, confidence, or would give everyone confidence that as a country and really, globally, that we've figured out how to live in the world of coronavirus. I think it's a very, big sort of litmus test, and I think if there's a setback, people look at it and say, geez, we still haven't figured this thing out. And I think if it goes well, it'll inspire a lot of confidence amongst consumers, not just in the realm of sports.
The relationship with Michael Jordan, how do you capitalize on that? How is it progressing right now, other than having the most famous athlete in the world connected to your brand?
Well, I think really, as much as Michael has accomplished a ton as an athlete, he's perhaps accomplished even more as a businessman, as a brand marketer. I don't think there's anybody who debate that he's one of the preeminent geniuses of our generation, or our last several generations, when it comes to business acumen and brand marketing. So, what we're looking forward to is a lot of what Michael's built and the various brands that he's gotten behind. That has really resonated with us is similar to what we're trying to do when we build our brand and build our business. And so we're looking forward to getting advice from him on how he thought about that and how it applies to what we're doing. And I think he's going to be a great addition in the boardroom.
Can you give us anything concrete about plans? Are we going to see him anytime soon, Jason?
Well, nature of this wasn't meant to be, marketing or promotion. It was really to tap Michael's business mind. So, we're going to hopefully get a lot of great value behind the scenes that will show up in our product and our strategy. But right now, there's no plans to have him, do anything beyond that. I think that's really the focus.
Jason Robbins there, the CEO and co-founder of DraftKings. All right, coming up, we talk to the CEO of Masterclass, David Rogier, on tips to improve at-home learning, plus his take on his own personal struggles in education and concerns about other children. That is next. This is Bloomberg. We close out our virtual classroom series this week with my conversation with how to improve the at-home learning experience with David Rogier, the CEO of Masterclass. And listen up, because this is a special one where he opens up about his own struggles with education and how urgent it is to make sure that no child gets left behind. We started by talking about the demand for Masterclasses amid the pandemic.
We have seen large spikes in demand. There are weeks that it was 1,000% up year on year. It's just been a huge surge.
So talk to us about what you've been doing to meet that demand. I know you've raised new funding. You're trying to get more celebrities on the platform.
Yeah. We've been doing tons of things. One is we've been working to offer free classes that are live, ones that are free for people that can't afford it. So tons of stuff there. We've also been doing a big expansion on the amount of classes we have, on the subjects and fields that we have. One of the things that we found is that during this time, what people want to learn about changes. So, for example, one of the classes that is taken the most right now is actually Chris Voss's class on negotiation. Chris Voss is the former lead FBI hostage negotiator, and why his class is so why people are flocking to take his class is he has a part of his class on tactical empathy, which is basically how to apply empathy. Well, if you are home with your kids or your husband, your wife, and you need to negotiate, help say, I need internet access, I want to be able to work in this room, that is a very good skill to have and learn.
So what are some of the other classes that you are most excited about? I know like your big push is getting new content, getting better and better people, and creating that desire to log in.
The classes that I love are ones that change how I think about the world. So I'll share one. We have a class by Hans Zimmer, who is the film composer. I have a horrible ear. It's hard for me to keep rhythm or to keep a beat. And Hans Zimmer starts his class with saying every note either asks a question or answers a question. And the first time I heard that, I'm like, what is he talking about? That doesn't make any sense. I don't agree with him. And then he starts playing notes and saying, this is a nice question. This is a hard question. And I could hear it. And that completely changed how I hear music.
Now, obviously, masterclass classes are fun. Do you see the potential for them to truly augment a traditional or serious educational curriculum?
It will never be a a substitute for in-person learning. However, one of the big things that is starting to happen and occurring and changing is in the pandemic. One of the things that is occurring in education, I think that will change education, is it's forcing almost everybody on the planet to ask themselves one question, which is, how do I learn online? That's a question that lots of people had never thought of before. And one of the impacts of that is there's parts of online learning that are better than in-person learning. And one of those things is online learning allows you to pick who in the entire world do you want to learn that thing from. It's not dictated by where I live, what school I go to. And so if you're going to do that, then one of the things that allows you to do is say, I want to learn from the best in the world. And I think that is part of why we have seen such a big surge in the amount of people that are taking masterclass right now.
Have you ever thought about giving credit or certificates or somehow formalizing the education you're providing? Because there are a lot of, not so flashy platforms that offer education, but are more focused on the outcome.
Yeah, one of the things that we actually judge, so how we judge if our classes are a success, and we've asked our students what they care about most. And it is not about grades. It isn't about if they pass a test or if they complete a class. It's about the impact they have in their life. And so one of the ways that we judge our success, our North Star, is we ask people after they take a class, if this class changed your life. And that's how we measure if it was a success or not. Right now, about a fourth of our members say the masterclass actually changed their life. And that's probably one of the stats I'm most proud of.
Now, before we started this interview, you shared with us that you struggle with a stutter, which has obviously been a subject of national conversation with Joe Biden running for president and him sharing his own struggles with a stutter. With so many kids now remote around the world, one of the things that I'm concerned about is how do you celebrate the individual and deal with the individual challenges that each student has. How concerned are you about that, given your own personal journey?
It's a really great question. I think it's really hard to be a kid and to stutter, and I still stutter now, right? And one of the hardest things is that you are teased for it, and people spend time to think about how you're saying it compared to what the actual idea is. And that was really hard, and is really hard, because I want people to think about what I'm saying and not spend as much time about how. I think one of the nice things about online, right, and it's not a replacement for everything in person, is that it allows you to go one-on-one, so you can meet with other people in your classes, you can get a tutor, so you can, it's much harder in a full classroom for any one teacher to be able to spend time with one student. What it allows online, and there's some things on our platform, there's other things on other platform, but allows you to get that one-on-one help. So I don't think doing things online takes away from that. I think you just have to work harder to actually find it.
Closing out our virtual classroom series this week, that was Masterclass CEO David Rogier. Really appreciate him sharing that with us. Coming up, the next generation at Apple, CEO Tim Cook and his deputies are cultivating a new era of leaders. We're going to take a look at who's who next. This is Bloomberg. As CEO Tim Cook begins his 10th year at the helm of Apple, he and his top deputies are increasingly focused on the next generation of leaders, those who will run some of the iPhone maker's most important divisions, from hardware to marketing. For more, I want to bring in Mark Gurman, who of course covers Apple and consumer technology for us. So Mark, obviously Tim Cook has been out front. There are some long-time deputies like Eddie Q, Craig Federighi, Phil Schiller. Who's on the bench, though, really, to potentially move into position when Tim Cook gets tired of his job?
Right. I mean, the biggest question is who's going to be the next CEO of Apple? And the answer, I think, is quite clear, and that's going to be COO Jeff Williams. The only wrinkle there is that Williams is 2 to 3 years younger than Cook. So if we're looking at this from an age perspective, it's likely he wouldn't be CEO for long, or he could just simply be CEO if Cook steps down sooner than we anticipate, which I don't think is going to happen. And then in our story, we go through who would be the different division heads for some of the other big groups like marketing and software and hardware and processors and all that.
Tell us a little bit more about Jeff Williams and why Jeff Williams and not some of the longer-term deputies who were there, you know, going as far back as Steve Jobs.
Yeah, I mean, Jeff Williams has been at the company for quite a while, but he was named CEO back in 2015, so about 5 years ago. And he runs all of the company's operations, so that's the entire supply chain. And they've sort of been positioning him for this role, given they gave him responsibility over hardware and software design last year, which basically says, hey, this person in line for CEO is not just an operations guy like Tim, but he's also in charge of product development. And for all intents and purposes, he's done a pretty good job being at the helm of the Apple Watch and the healthcare initiatives. But don't get me wrong, Jeff Williams is an operations executive first, but he does have some of that product leadership expertise that Cook has not displayed as much.
What about on the diversity front? How well is Apple doing in terms of promoting and advancing, you know, folks who, you know, don't look like Tim Cook and Jeff Williams?
Right. I mean, if you look at the numbers, the percentages of diversity that the company has, and by the way, they haven't released numbers yet this year, it's not particularly great. But if I'm looking at the list of people that we believe they're targeting to be that next generation of executives, right? If you look at marketing, two of the people in line to potentially take over for marketing eventually, Kyan Drance, who runs iPhone marketing, and Susan Prescott, who runs app marketing, are both women. The person in line to eventually become the head of operations is a woman, right? We have someone who's going to probably be the next person in charge of chips, Sri Santanam. He is from India. So there is a bit of a differentiation here. On the executive level, obviously the current retail chief and the previous retail head, Angela Arendt, both obviously women. So on the executive front, still a long way to go. But under Cook, they've added, you know, they've put women in charge of two major divisions, retail and general counsel. And I think there's clearly more to come in the coming years.
All right. Mark Gurman, you will be all over it. Thank you so much for giving us that update. Really fascinating story on the next generation of leaders at Apple. You can check it out at Bloomberg.com. Well, as we have been covering, Fortnite creator Epic Games has been embroiled in a royal battle with Apple over an app fee dispute. In the latest move, the iPhone maker filed a countersuit to stop Epic from using its own payment system for the game. As part of my Bloomberg Studio 1.0 interview with CEO Tim Sweeney in late July, before the legal spat, we talked about Fortnite's success since its creation. Take a listen.
It's not just a game. It's a place where you can bring together brands and performers and artists and musicians and all sorts of different people to create really exciting community events. You know, the long-term future for Fortnite will be opening up more and more to community creation so that you don't need to do a deal with Epic to bring your concert to Fortnite, but anybody can build that stuff in the environment we have using the Unreal Engine tools and bring their experiences to Fortnite, whether it's an event, a concert, a movie, IP, or a car, or anything like that.
Let's talk about the movies. You're working with Hollywood studios on content creation while content has been stalled in the middle of the pandemic. Talk to us about how your technology is being used, for example, to create a movie like Mandalorian.
Well, you know, the Unreal Engine technology that's powering all of this, it hit a point about 5 years ago where it's capable now of real-time photorealistic scenes that are difficult or impossible to distinguish from reality. And at that point, everybody outside of the game industry became interested in it. For virtual production of movies, for architecture, for design visualization, if you're designing a car or any sort of consumer product. That's that's brought a lot of growth in bringing the technology outside the game industry.
Now, Fortnite came out in 2017, but as I understand it, you started developing it in 2011. What happened in between? I believe there were some peaks and valleys.
Yeah, you know, at the time, Epic was developing the Gears of War games, you know, for the Microsoft Xbox as their primary effort. And Fortnite actually started out in a game jam. A team of about 10 people got together over the course of the week and built this experiment called Fortnite. We spent about 7 years with a small team just trying different variations of it to try to find the magic of it. At the very end of the experiment, after we built up a cooperative multiplayer game, Battle Royale became the hot thing in the industry, and we built Fortnite Battle Royale, and that turned out to drive really exponential growth, something like we've never seen at Epic or even in the game industry before, where we reached 350 million players worldwide in you know, just the course of a few years.
Tim Sweeney there, the CEO of Epic Games. You can catch the full episode of Bloomberg Studio 1.0 in my interview with Tim Sweeney this weekend starting 7:30 p.m. Eastern Time tonight. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Happy Friday. Have a wonderful weekend. Hopefully you can breathe a little better as the weekend continues. Wall Street Week is next. Don't miss it. This is Bloomberg.